Google just reported earnings and the stock is up to $130 per share. In this video, I'm going to review Google's earnings report and update you on my valuation model and try to determine if Google is still a buy at such prices, what kind of return can you get, or if it's maybe too late to buy Google and we should wait maybe for another kind of opportunity. But most of you know me that I'm not a fan of big tech. I try to avoid them. I like smaller and micro cap kind of stocks, but I always said that Google was my favorite from the big tech, and I still think it's one of the most undervalued ones. And I'm going to review all of that in this video. This is the only big tech stock that I pretty much bought. I bought it around $85 per share. I made a video. I said Google looks like an amazing opportunity, but it could still be an okay opportunity at such prices in my opinion. But looking at what they reported, I'm very impressed with the numbers. They did make a good beat on earnings, $1.44 EPS versus $1.34, over a 10 cents beat. Pretty amazing. They also beat on revenue, YouTube ads they beat, and Google Cloud they beat. And I'm going to talk a little bit more about Google Cloud because this has been the only one that's pretty much losing money within Google, and it has been destroying value and hurting Google shareholder for a very long time. But the last quarter, it put up a operating profit, and this is the second quarter in a row where Google actually put operating profits within Google Cloud. I'm going to talk about it a little bit more, but I'm very satisfied with the execution team from Google, and this is mainly around the general and administrative. They did lay off a lot of excess employees they didn't actually need. They hired a lot of them after the pandemic and the stock was going up. We had this massive bubble, a lot of people getting hired that actually did not really, were not needed. They could just, some other people could actually do the job, and Google recognized those inefficiencies and corrected their mistake, and we can see the general and administrative expense actually decline. This is very rare to see within big tech companies. Pretty much every single quarter it tends to go up, but Google actually posted a decline in general and administrative, and this is something that I'm pretty satisfied about. Net income actually increased from 16 billion to 18.3 billion, so everything is moving pretty much in the right direction. And talking about Google Cloud, again, I'm very satisfied that it's finally posting an operating profit. It used to lose around 590 million, and this is the second time it posts a 395 million of profit. But there's a lot of other arguments where maybe Google is kind of moving those costs to another place on the balance sheet. Maybe it's some kind of a corporate cost, because the corporate cost went from 239 million to 1.2 billion. Some other people, it says maybe they're putting it on depreciation and some kind of accounting stuff, which is very, very possible. But this is the second quarter where Google Cloud actually posts a profit and the revenue is increasing for Google Cloud. So this is all positive stuff, and I'm very happy to see them all in the earnings report. Something else that I'm happy to see is that Google did buy back some stock. We can see the shares outstanding. They were around 13.2 and now it's 12.7. So this is also, something great, because most companies, they buy back stock at the wrong time. They buy them at the top and they issue shares at the bottom. And normally you want companies that are doing the opposite, and Google has been doing the opposite over the years. In 2022, they bought back 2% of their market cap, and they have been buying a lot of stock back in the first and second quarter of 2023, and this is something very good to see. If we look at the balance sheet, I personally believe they should have bought back a little bit more than they did, because they still have $118 billion of cash and cash equivalent. This is huge. It's just massive. Just perfect. It's very hard to find such companies. Pretty amazing. 118 billion, which tells me, in my opinion, that they should have bought back a little bit more stock and took advantage of a rare opportunity when Google was trading below $100 per share. They haven't done it. They did do a lot of buybacks, but I believe they could have done a little bit more than they did, and they would have benefited shareholders much, much more. Now, if we look at where Google is actually trading at, it's trading at 21.5 times earnings. It's actually a little bit higher because it hasn't reflected within ticker. So it's around 22 times earnings. So we can see that Google is now trading around 22 times earnings, which is actually much lower than its historical average of a mean of 23.6 times earnings. So it's after all this rally in 2023, it's still much lower than the historical average. And Google traded as high as 32 and 33 times earnings, and now it's still only sitting at 22 times earnings. And if we compare Google to other kind of tech companies, it's still very undervalued compared to them. I mean, it's still sitting at, we said 22 times. Apple is sitting at 30 times. Microsoft sitting at 32 times, and this is forward earnings. Most of those companies, like Apple, is like 36 or 37 times trailing earnings, which is why I believe Google has been more punished than it should. I still believe it's a better opportunity on a relative basis. I mean, if I had to put a pair trade, I would short Microsoft and buy Google. If I had to do that, I don't like to do that stuff, but I still believe Google is one of the best of those companies. Google and Meta, I said, but now Google, I believe it presents a much better opportunity than the other kind of tech companies, even after the recent rally. But I'm gonna take a look at my valuation model here, which I updated within the current market cap, which reflects $130 per share. And I'm gonna tell you, what kind of the upside potential that I believe you will most likely get with Google if you buy it right now at $130 per share. And I put in 9% revenue growth from 2023 to 2027, which I believe is very, very fair. I believe it is because of how they've been growing. I think 9% is fair. They could grow a little bit more, maybe 11 to 12% if Google Cloud really takes off and some kind of AI investments, but I'm not counting those in. I've just said that Google is going to keep growing around 7, 8, 9%. And I think 9% is a very fair number. Net income margin, 22.5%. I use the same one, which is around 22.5%. I put in a PE ratio of 23 times earnings because it's around the historical average. The historical average for the past 10 years was 23.6. So I put in 23 times earnings, which I still believe is fair. I put a 1.5% dividend, which is more of a buyback yield if Google keeps buying back around 1 to 1.5% of the market cap every single year in terms of shares outstanding going down. I would get 44% on the upside or 7.5% compounded every single year for the next 5 years, which is actually not bad at all. And I need to update this over here, that if I want to double my money with Google over the next 5 years, I would have to buy Google around $93.59 per share. And $93, I mean, is not far off. It's somewhere pretty close to where it was trading at just a few months ago in February of 2023. But even at $122 or $130 per share, I don't think Google is bad at such prices. I mean, they could grow revenues a little bit more. Maybe the net income margin is much higher because Google Cloud becomes profitable. Maybe it goes to something like 25%. Then in this case, Google could return around pretty close to 10% every single year, or 59% on the upside from $130 per share, which is still not bad at all on a relative basis to the other stocks or the S&P 500. Even at such prices, I would much rather buy Google than Apple or Amazon or even something like Nvidia and these other Microsoft and these other stocks. It's not the best deal in the world, but I still believe it's the best deal in the big tech stocks on a relative basis, and I really like the earnings for Google. So thank you for watching this video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.